Good morning, welcome to the market view for Tuesday the 8th of July 2014. Starting off with the British pound 30-minute chart. Yesterday, Monday the 7th, we can see that we had a sell signal in the pound at 10 a.m. and the market thereafter moved lower down to the 20 pip level. If we just mark this up, you will see this. And the maximum profit on this trade from the entry down to the low, or the maximum points available in the move, was 28 pips. Of course, if you didn't take the 20 pip scalp, which is something that I generally don't do in the hope that the market will continue to move lower, and use a 50% trailing stop above the green bars once the target's hit, you will have been stopped out at around 17122. The entry price there you will see at 17135 there. So in the region of 17 pips on that trade. The market on the overnight has just been sideways, having rallied back around 50% of the move yesterday afternoon, and then just traded sideways since then. But 28 pips max yesterday, 17 trailing, and of course the 20 pips scalp there. In the daily charts, you can see we're stuck in this sideways range, and if we just get a zero extension and just mark across from the high and the low, you can sort of see the trading range there that this market is currently in. 170.94 or 171, 171.75 is around about the high. There's another high of this bar on Friday, but that's a sort of rough guide to the trading range that this market's currently in at the moment. If we wanted to just have a look and see from a sort of a pullback perspective of where the downside is in here, we can use what I call the rolling fib, which is sort of the last low to the left, which makes no sense, I suppose, but what it's doing is, what I do is just keep going back to the recent lows and just up to the recent high, and then mark up. And you can see there yesterday the market trading down to this area here of 171.14, then finding support and moving back to the upside. And speaking of the upside, of course, we'll have the high from the 4th down to yesterday's 7th, and that's sort of the range that we're stuck with at the moment. So a very narrow range, very quiet as far as the pound is concerned. It certainly has been now for the last 5 days, and it's a case of, again, waiting for the market to, break out of this sideways trading range, really, on whatever news it's going to take to move the markets. You can see there that the pound volume, this is the daily volume, is moving slightly lower as well. In the Dow Jones yesterday, the market sideways. There was some good trades yesterday. Started off with a 20 pip loss, followed by a 20 pip profit, and then the market just traded sideways for the rest of the day. That was trading the 5-minute Dow. As you can see, we had an inside bar yesterday, and what we mean by inside, for those of you who are not familiar, is that the trading range for yesterday is inside of the range of the day before, which you can see there. So that's an inside bar. It's classed as indecision. The market doesn't want to go high, doesn't want to go low, so there's a sort of vacillation by the market participants there during the trading session. So it's a case of what news is going to be around today in order to move the market, and we'll have a look at that before we conclude. On the implied volatility front, we had the historic lows being made last week at 7.9. That was on Thursday last, and we've got yesterday the market finishing at 8.58, so bouncing back 0.6% yesterday towards the upside, but we've certainly in an area now that is consistent with a major move in the underlying market. And as I keep saying, unfortunately I can't give you the date or time, and if I could, then I certainly would do that. So we just have to work with what we've got in the chart, and if we just have a look, you can see we've got the market going into a bit of a sideways move there. So let's just have a quick look at the news before we conclude and see what is out today. I think we've only got one piece, and it's the manufacturing production from the UK at 9:30 a.m. That's it until tomorrow. Have a good day. As ever, thank you for your support. It's very much appreciated, especially during the quieter times that we're experiencing at the moment. It's very frustrating for all concerned, not just yourselves, but it's a case of how the markets are at the moment and having the patience to hang in there. So that's it from me. I will see you in tomorrow's Market View. Thanks for watching.